A lot of people don't realize that you have assets that you can use as income when it comes to a mortgage loan. It's called asset depletion. A lot of people think that you only can use those on non-QM loans, but you can use asset depletion on FHA and conventional loans with Fannie and Freddie Mac. The biggest thing is when you use your asset depletion, you need to make sure the assets are structured right. The issues that we've been running into lately, a lot of people go for the traditional CD. You have stocks and things like that. So with CDs, the issue is that you go in and there's usually a penalty for using that CD. So because there's a penalty for using that CD before the withdrawal time, a lot of underwriters and a lot of banks will not allow that income. So I've had situations where I've had a client and they had $500,000 in a CD and all the other accounts were less money. So it wouldn't qualify if we didn't use that $500,000. They were just basically asset heavy with very little, no verifiable income other than the assets. So in that case, they had to take a penalty and actually transfer that CD into a money market account or a regular banking account. So those are things that you want to go with your loan officer before you go over your application. So if you have these assets, for those assets to be even used as assets or reserves, they have to be a certain type of asset. So you want to show your loan officer or myself all your assets so that we can determine what we need and what we don't need. It could cost you extra money. You could have, early withdrawal penalties, as this gentleman did. It wasn't as much to keep him from purchasing the home, but it did work. Underwriters may use a lesser balance than what you think it is. So you may have 100,000 in there, and you're like, oh, I have 100,000, and they're going to divide that by 60, and that's going to be my monthly income off that account. But if it's not in a certain type of account, or if it's in the wrong type of account, they may only use 60% of that, in some cases even 40% of that. So the usable balance is very important when it comes to that. And then you can combine an asset depletion, loan asset depletion income with your Fannie Mae, your Freddie Mac, your FHA, VA loans, and everything. Still, it's really about the assets. CDs are considered less liquid than checking accounts, savings accounts, and brokerage accounts. Some lenders may discount the value or exclude it entirely if it's in a CD. Documentation requirements that you have to provide to us. We need the full CD statements. We need your full account statement for whatever investment that you're trying to use, your terms and maturity date of that investment. So like if you have something and it closes in 2027, it's 2026, and you're trying to close before 2027, then we have to look at the terms and conditions to see what the actual terms and conditions are going to cost you and what date you're pulling it out, so we can take that money from there. Also, whatever your down payment is going to be, that's going to be taken away from your income. So if you have $500,000 and you need $50,000 down, then you only have $450,000 for us to actually use as for your asset depletion. If the CD matures soon, great. Or if the investment matures soon for where you could take it out without any investments, that's good, as long as you're closing after the mature date. Again, underwriters are usually going to try to haircut the balance on it, but you want to get all this done up front. You can always get upfront underwriting to see where it lands, if you need additional income, or if you had to add additional investments that you may have not already disclosed. So structuring your loan is always the key to being able to close and be able to close quickly. So if you have any questions, you want to run by a scenario, you can reach me at reggieloans.com or 404-461-3172. Talk to you soon.